What is going on, everybody? Today we're going over McDonald's stock, ticker symbol MCD. Many of you guys have asked for this. I'm gonna find the fair value of McDonald's stock according to the Intelligent Investor book, as well as going over the financials. And we're gonna see if the new crispy chicken sandwich is the one that will get them over the top and make them a lot better than all the competition. I don't know about that, but I am gonna go over everything that I need to go over. That being said, let's go over some chicken tenders or McDonald's stock. Let's get started. Yeah, let's see what we got. First of all, Yahoo Finance, McDonald, ticker symbol MCD, price today 207, doesn't move a lot. Market cap 155 billion. I assume the people that hold McDonald's are doing this for this dividend 2.5%, 249. Okay, but in order for me to find the fair value of McDonald's, I need to find two numbers. Item number one is this one, earning per share $6.31. That's not bad. That's actually pretty good. So we're gonna put this in the Excel. Second number that I need to put in the Excel formula is this one. Next 5 years growth per annual 12.77%. So they're gonna grow by 12%, let's say 13% every year for the next 5 years. That's pretty good. It's pretty solid for McDonald's. They've been here since, I don't know, the 50s or 60s, if you saw the movie. But 12% growth for a company in this size is pretty good. Look at this number. Next quarter growth 200%. I assume, I'm not gonna take this as I will take this as a grain of salt, but if they project to grow 100% next quarter, I assume, just speculation here, that they know more than me, that everything gets opened. Everything gets opened in Q2 of 2021. Cruises, flights, Disney, everything gets open again, and all people can just go back to normal and go outside. And if people go outside, they go and eat McDonald's. That's the assumption in here. And I'm sure, I'm not sure, I am sure that people in McDonald's, the high management, know a lot more than me about what's going to happen and when. But this, either way, I need to put this number in the Excel, 1277. So let's do that. You guys that don't know me, this is the Excel, how to value a stock like Warren Buffett. I have taken the Intelligent Investor book, 600 pages that you can read, and I just made a nice automatic formula that you can analyze each and every stock that you want to know the exact fair value, as long as you have a couple of things, basically two things only that you need as a positive. Earning per share, I saw you where to find it, 6.31 for McDonald's. As long as this is a positive, it's a good thing. And this one, growth, 1277, also showed you where to find it. As long as this is a positive, you will find the fair value of McDonald's and the price that you will be a buyer, which is about 33% discount from, not about, exactly 33% discount from the fair value. So we will find the exact price, and according to the price today, at the price that we will be a buyer. In order to do that, we need to find the AAA bond yield of McDonald's. But before we do that, let's go over the financials. Want to grab a copy of this Excel or read the 600 pages book, up to you. I will grab a copy in the description below, and you can also support this channel if you find value. That's also helpful. Thank you guys. Let's move on. Let's go over the financials of McDonald's stock. First of all, I want to see the income statement, the revenue right here, growing. I want to see revenue growing. So this is the end of 2020. Good. I can analyze the whole year. 2018, 21 billion. A year later, that 21 billion hasn't changed. And the year that ended 2020, 19 billion. So they're down $2 billion in revenue, or 10%. It's not good. And before that, they were stuck 21. I know they had a lot of scandals with the, I don't know, the CEO from like 5 years ago. I've read about it, and they changed CEO. I'm sure the new CEO, the one that's in charge of Europe and all that stuff, will take McDonald's higher. He's going digital. He's going loyalty programs for the app. He's gearing towards the young audience that are using digital everywhere. Basically, I'm sure McDonald's will do fine, but as of 2020, they were down 10% basically in revenue. Let's see the ratios that I'm looking for. Okay, I checked the gross profit of McDonald's. I came to 50%, 50.77, almost 51% gross. Amazing. If you know my other videos, you know that Buffett ratio says 40% gross and 20% net is ideal. So we got ourselves more than 40% gross. We got 51% gross almost, which is pretty awesome. What does that mean? Let's say it cost them $1 to make a burger. They get $1.50 back from the consumer gross. Let's see how much they make net. That's the most important number. So let's do that. And look at this, 24.6. Let's say 25% net. You know what? Starting to really like McDonald's. Personally, I like Burger King more, and that's a different stock, QSR. If I remember correctly, QSR is Burger King, Tim Horton, and Popeyes. If I remember correctly, I need to do a video about that. All those three brands combined: Burger King, Popeyes, and Tim Horton. But McDonald's, 50% gross, 25% net. That's a winning stock. That's a winning stock plus the dividend. That's a winning stock in Buffett book. We will move on definitely. I assume the 10% drop in revenue is because, well, 2020, no one can go and eat inside. People eat in drive-through in the U.S. I don't think I'm pretty sure there's no drive-through worldwide. At least not where I came from, and I'm sure not a lot of countries have drive-through, and that's what make them lose 10% in revenue. But again, once everything opens Q2, according to this analyst that says that they will grow by 200% in Q2, and that's a possibility. If there's no drive-through worldwide and everything gets open worldwide, people will storm into not just McDonald's, a lot of places as well. But basically because of all the pent-up demand. But 25% income, that's pretty awesome net income. Let's go on. I'm in the balance sheet. Okay, right here, total assets. I want to see that the total assets are growing, and this is the great number. So they're growing their assets from 32 billion, 47 billion, another 15 billion, another 52 billion. That's another 5 billion from 47 to 52. They're growing their asset. Let's see which asset they're growing. This one, the non-current asset, is growing. Net PPE. That's the building. They're growing by 38 billion compared to 37 compared to 22. More building, more places, more McDonald's places worldwide. And if you saw my Starbucks video that I posted like a month ago, I said you will see a Starbucks in every corner. Probably 40 years from now in the world, you will most likely see McDonald's in every corner of the world 40 years from now as well. Not gonna go anyway. McDonald's is a forever stock. You just need to know if you're buying at the right price, and we will find the exact price for that. Let's see the long-term issue. So I found the long-term debt. McDonald's will take 10 years. McDonald's will take 10 years to pay their long-term debt. Okay, and that's the Buffett ratio says that 4 years and below is ideal. And I understand that they're working in it's not a check mark. At the end of the day, this is a fail, not a pass. But they're just growing and expanding, and same for Starbucks. And I assume that's why Buffett doesn't hold Starbucks or McDonald's. They're gonna expand for the next 20, 30 years plus every time, just to get themselves more and more stores to be in every corner of the world. While Buffett will not buy McDonald's because that it's not 4 years or less, it doesn't mean that you shouldn't, of course, after your own due diligence, not this video alone. But it is what it is. They're expanding, they're buying more buildings worldwide to be here forever in every corner of the world. That's probably what I think is their strategy. Same as Starbucks. Let's keep going. Looking here at the end of 2020, and I'm looking at this couple of items. Issue of debt. So the issue of debt of 5.5 billion, but they pay a debt of 2.5. So they took another 3 billion debt. Most likely, well, first they paid from that 3 billion debt $900 million buyback, which is a good thing. So they're doing buyback and they're doing dividend of 2.5%. That's pretty good. It's not ideal, 900, you look like a big number, but they did a $5 billion buyback in 2019, 5.2 buyback in 2018. I would like to see this number grow by 5 times. If they do 5 billion instead of maybe 1 billion, 900 million is almost 1 billion, then the share price will go up, I don't know, a couple 10% more, just rough number, give or take. But they haven't, and 2020 was a rough year. I'm sure McDonald's in America grew, nothing changed because there is drive-through, but worldwide it went down. And for them to still do a buyback, that's a good sign. It's a good sign. It's not ideal. Ideally it's 5 billion, but it is what it is. We'll see next year results, probably with an updated video. And the free cash flow, we got 4.6 billion compared to 5.7. So they went down by $1 billion. It's been a rough year. It's been a rough year for McDonald's. Again, you guys that are living here in the States, we don't see that because we can go to McDonald's with our car and buy McDonald's with the drive-thru. It doesn't happen worldwide. It happens here. And worldwide, they got hit. But most likely, once everything will open, they will get back to normal. And I'm sure there will be they will do just fine. That's at least in my opinion. That being said, let's find the fair value of McDonald's. Back in the Excel, guys, I found the AAA bond yield of McDonald's 3.8%. Basically, once I hit enter, I'm gonna find the fair value of McDonald's stock as well as the price that we will be ideal buyer, as they say. Before I do that, guys, let me do a quick introduction. My name is Ziv, also known as Finance After 40. You can find this Excel in the description below, as well as great other stuff. I've updated and put many new links, valuable links, not just spam stuff, valuable links regarding real estate, regarding selling options for income, regarding personal finance. Go check it out. Leave a comment below if you have questions. I always answer them about anything that you want to put, but each and every link in my description has a value that I think will benefit you, my viewer, basically. That being said, guys, let's find the fair value of McDonald's stock. So $248. Okay, that's not bad. We are at 208 almost. That's another 40 bucks. 248. That's 20% from here. 20% from here. And ideally, the price that you would be a buyer if you don't have McDonald's stocks already is 167. It doesn't mean it will go there. It just means that 167 will give you a buffer of 33% discount from where it should trade. But ideally, if you already have McDonald's shares, the fair value according to the Intelligent Investor book is almost 250 bucks, 248. So there's still room to grow. And don't forget about the nice, very nice 2.5% dividend that you get, which is pretty awesome as well. If you gain value from me, guys, subscribe to my channel, hit the bell notification, go to the description below and grab a copy for yourself, and you will also support this channel. I hope you gain value. Thank you, guys, and I will see you in the next video. Yep.